All right, guys, in this video, I'm going to review Fidelity's long-term Treasury Bond Index Fund, ticker symbol FNBGX, which is recommended by one of my members on YouTube. So I thank you so much for bringing that up. Let's get right into it. Let's quickly look at the top 5 issuers. This is a United States Treasury bond. It holds 86 holdings as of January 31st, 2025, and it's all in the United States. So it's normally investing 80% of the assets in the Bloomberg U.S. Long Treasury Index, maintaining a dollar-weighted average of maturity of 10 years or more. Now, let's take a quick look, just the snapshot details. The fund inception has been since 2005, and the share class inception has been 2017 with an expense ratio of 0.03%. You can look at the 10-year chart right here as a quick snapshot. If you were to invest $10,000 in 2015, it would now be worth $8,400. Performance and risk. We know bonds have not performed well as of late, but it doesn't mean forever they're not going to perform well. The 30-day yield is 4.65% as of February 26, 2025. And in January 31st of 2025, it averaged 4.9%. So definitely a very nice yield, but the problem is it has decayed over time. The price has just decreased. If you look at the ratings, 3-star rating out of 10 years. Looking at the composition, not much to review here, but I just want to show you a quick thing here. It shows you how U.S. Treasuries makes up 99%. And obviously, when you buy bond funds like this, they are subject to interest rate sensitivity. And it's showing that it is on the extreme level. And that's why you have seen the bonds decrease so far, because of the rising interest rates. Look at the top 5 issuers. We know it's the United States Treasury bond. The credit quality is all in U.S. government. So, I mean, to get bonds, this is pretty much the highest credit rating that you are going to get. And it has to have at least a 10-year maturity rate for it to qualify. Looking at the portfolio data, 30-day yield is 4.9%. The yield to worst is 4.87%, and distribution yield daily is around 3.76%, which is clearly subject to change. And when you look at the majority distribution, you can see that they are out 10 to 15 years is 2%, 15 to 20 years is around 42%, and then 20 years, greater than 20 years, is around 54%. So you have a good asset allocation of basically 15 years and more. So I think this is an interesting fund to invest in. But with the rising rates, that's why the bond has gone down in value. Now you can also see if your 0.03 expense ratio you were paying is 30 cents for every $1,000. And here just shows the dividend history of receiving per share 2 cents. Reinvestment price, it shows that where it was the dollar, the NAV price was trading at $9.19 at the time of that recording when it was trading it. So definitely an interesting investment. It's no initial investment. You can get in doing a couple of dollars at a time. For me, I think there are better options out there, but I think this is something that if you think bonds or you think interest rates are going to decrease over the next 5 to 10 years, this might be a buying opportunity, because when you look at the chart, interest rates peaked, they started raising, and then we started getting a decline in this performance of this fund in our long-term Treasury Bond Index Fund, FNBGX. So tell me what you think in the comment section below. I think it's interesting to diversify your portfolio, especially as you're getting older. You don't want it decaying over time, but you're also receiving that 4 to 5% divvy, so that's kind of nice as well.